It's Saturday morning at 10 o'clock in Chicago. Hello, everyone. Welcome to episode 28 of Bitcoin and Ethereum Elliott Wave Analysis with your host, the Cowboy from Elliott Wave Cafe. Let's jump straight onto it and see. I haven't seen you guys in a couple of weeks. Hey, you can find me on Telegram. I'm pretty active on there, in the public forum, also in the premium room. Now lately, I'm trying to get more active on Twitter as well. So go ahead and subscribe and follow me on Twitter as well at Elliott Cafe. There's little nuggets of information that you might find helpful in there as well. And I'm trying to sound smart every once in a while. So we'll see what happens with that. So let's jump straight on, guys. What's going on with Bitcoin? It's been rallying nicely. We are been as high as 48,000. So are you getting excited? Are you getting excited about a possibility of a second wave being found at about 29,000? I am, but the Elliott Wave method tells me, hey, it's nice to be excited, but you gotta keep an eye on the alternatives. And one of them is that this whole thing here, it could be just a fake B wave rally or an X wave rally, and that's kind of keeping me up at night a little bit. We'll see what happens. I think this consolidation here in the second wave, it's got its own kind of rights. They try to kind of break through this 29,000 level. They haven't been able to, and by they I mean the overall market. It's been a strong level, surprisingly held very, very well, and we've been rallying ever since. If this is the bottom of the wave 2, then this is just the initial advance in this wave 1 of the lows. We're probably going to get a small pullback here in a second and then continue to rip higher towards 100,000 towards the end of the year. So what's happening here over the next couple of months is extremely important, because if we start to fall more impulsively out of these levels, that means that we're probably going to continue to break 29,000 and push lower in the second wave. So it's exciting, but I got my doubts a little bit on here, and I'm positioned for it. We bought Bitcoin at 31,000 on the sell-off. We kind of, hold on to it as much as possible, with grinding kind of our teeth as these 30,000 level were getting challenged, and you were going to look like a fool, right? It's like, hey, you bought at 30, now it's at 10 or it's at 15, you got to live it even more, and all those kind of comments. But so far, so good. Listen, you don't have a lot of perfect entries in this market, and you got to pick your levels and you got to get in and just kind of follow the strategy, right? If you're a long-term holder and you're buying at 30, and you want to add back on 20, it's a different thing than necessarily, for a longer term, let's say, hold towards 100 to 200,000, rather than trading it when you're kind of going on the smaller time frames and you're just trying to kind of, nibble at it here and there. And then you got to have, really perfect setups, with the proper stops and everything else in place, right? To be able not to get chopped off by this market. So listen, let's jump over to the next scenario, which is the one that's, a little more, kind of sideways in here, and it's something that maybe not a lot of people expect, right? We are humans. Are we kind of geared to say it's either going up or either going down? We are not really prepared for sideways moves, but this could be something that could happen here over the next few months, maybe all the way until December. We're just going to get a bunch of moves here up and down in this fourth wave. So as you can see in here, we're looking at it as a cycle wave 1 followed by a second wave 2, one primary, second wave primary, much larger rally, let's say towards $500,000 in Bitcoin. The other one, it's more conservative and says that, I don't think so. I think this is just the fifth wave of the cycle. We're in a fourth wave. We're going to break out of here shortly, maybe towards 120K, and then all hell breaks loose. The U.S. government bans it, and then you come back down to, $1,000 in Bitcoin. Just kidding. We'll see. But this is one scenario where you're going to have kind of a complete, let's say, super cycle, because that's a 1, 2, 3. That's the cycle degree, and then you have a super cycle complete. Listen, if you got to stay below 400,000, because if you go, if you pass that, then you have a little bit of a violation here in the wave degrees, in the sizes of the wave. This fifth wave would be bigger than this third, and if you know your rules, that's not possible. Wave 3 cannot be the shortest wave in a sequence in a motive wave. So that's kind of the more sideways and more kind of drawn out move. I'll take a look at it on a different chart here in a second as well. And here is the other one. This is the one that says all hell breaks loose. Not long from now, maybe you squeeze one more time higher, maybe you go to 70, finish up this, let's say another move up higher, or maybe you're already done. This super cycle is already complete. And then, I don't know what the news will be to trigger this, but then Bitcoin just comes back, and Peter Schiff will be super happy, and all the Bitcoin bears out there will be like, oh my goodness, I told you guys should never bought this, and then you're going to get a larger 3-wave decline, and then we'll see what happens. I don't think that's the scenario. I just kind of throw it out there to scare you a little bit, okay? Now, here is the other one in here, that is the 2-week chart of an arithmetic scale. And, if you want to play around with this, just to kind of have a little bit of a different perspective, right? You can see how messed up this chart is when you don't use the logarithmic scale, when you have the proper percentages in place. In here, you can have, this wave 1 back to 20,000, which looks so small. Then you pull back in the second wave. You go up in 3. This looks pretty nice. So in terms of kind of, the way a third wave should look, right? This is kind of what you want to see. And then means that, you're going to get a fourth wave, and then you're going to get a 5. This is very, very conservative. Basically tells you you're going nowhere fast. You're just kind of in this fourth wave triangle. Wave A finished. You're going up in B towards 51,000, 61%. You'll come back down in C, D, E, and E. People are going to pull their hairs off. Bitcoin is going nowhere. What's going on here? We're all getting chopped to pieces. It's an accumulation. It's probably going to take all the way to maybe January next year. And then you're going to start to rally, and you're going to have maybe an extended fifth or a lame rally up into 70, 80, finished wave 1, of a cycle, and then pull back again towards 60, 50 in a second wave, and then go back up from there. So keep an eye on this one, because it's totally possible. And I'm sorry I don't have a super clear directional way for you. I'm not the type of Elliott wave guy that comes in here and says, hey, listen, Bitcoin is going to 200,000. This is my main primary count. Otherwise, I'm throwing Elliott wave out the window. No, I'm giving you all these kind of scenarios so you can kind of, see what fits with your analysis, and, what other information you have from different sources, right? My job here is to kind of open up the Elliott wave book and just show you different scenarios. In terms, I don't know if it really helps you in terms of investments, and I'm not here to give you investment advice, but it's one of those things where if you believe in this, if you believe in Bitcoin, if you believe in this blockchain technology, you obviously want to stay long, and you're going to continue to accumulate. If you're a trader and you trade, every single day, or let's say every single week, you go in and out of things, then you really got to dive down into the weeds of things and learn the proper procedures. I can show you a lot of the tricks into the program if you ever want to visit. You'll see some of the trades that we take based on this methodology. But if you're a long-term holder, this kind of presentation here just gives you a little bit of a taste of different things that can actually happen. And listen, nobody can read the future. I cannot read it. And there is like certain things that make more sense than others, and that's kind of what I'm here to show you through these counts. So this is basically a very, very probable scenario, because it's you've come after a very, very large advance in here in this larger third wave. So we'll see if a fourth wave triangle here would kind of make total sense. The market has to show us if you kind of start to push back in this B wave and you get above this 55 to 60,000, then you're very likely starting to begin a larger advance here in this much bigger third wave. So pay attention to that, and we'll see what happens. We'll see how the market kind of will throw at us going next. Now, another thing that I'm kind of excited about is this 1 month chart in the candles. I talked about it a couple of weeks ago as well, where you could see this very nice kind of bullish candle of that $29,000 lows, and we're getting a little bit of a follow through. So we're just in the middle of the month. You've made a new high. this kind of monthly candle looks good. Hopefully it can build more momentum to the upside. If it can close towards 60,000, I think that's an extremely bullish signal. That's another 15,000 from here. That will be a nice signal that will continue to push higher. So again, just kind of going back to my comments about how you read price action, it is the only way you can do it, right? You look at these formations, you see what the market tells you. This was a bearish setup, but it didn't pan out, right? The market stopped at about 29,000. They said no, even though you have a pretty kind of bearish formation in here, we're not following through. And every time you're not following through on something bearish, that means that something extremely bullish is coming. So pay attention to that, because you know, you might have a failed setup, and those are very strong moves in the opposite direction. Let's continue to watch it. It looks even better on the weekly charts, where you can see, you know, how Bitcoin is kind of climbing back inside this channel. Nice double bottom here at 29,000. So far the weekly candles are looking pretty good. This is a very nice bullish hammer back inside this you know, this channel. We're coming into a very strong supply zone, I would say, back here, so no surprise we're getting a little bit of a pushback. I'll show you some smaller charts here in a second, but the weekly candles look good as well. And let me just touch quickly on the moving average. I know some of you guys hate when I do this, but you know, this is an average move of the prices, so we gotta look at it. You've come below the 200. You know, people were getting super bearish on this, you know, death cross, right? Well, what is the death cross now? Is it still valid? Is it not valid? Is this a counter trend rally? What's going on here? Well, you can see back in 2018, you've come below this, you went back above it, so you started to kind of play with it a couple of times. If this is what's happening in here, and you're starting to come back below it and close below it, that, you know, it's likely that this market might continue sideways in the triangle. Okay, so pay attention to this 200-day. We're above it right now, but if we're coming below it, we're breaking below this 21-day as well, and starting to tag the 50. You know, that's a little bit of a failure to the upside, and that will mean either, you know, a larger correction lower or more of a sideways move. This is kind of what happened in here as well back in 2019. You know, you come below it, then you went back above it, you know, and then you crushed again. So we're flattening out in it. This one means a lack of trend. Okay, the 20-day moving average, it doesn't have an upward slope anymore. It's sideways. That's an important signal that the market might be able to take, might need to continue to take this pause for a little while longer. Right now, if prices continue to push higher and you start to challenge this again, $60,000 to $65,000 level, $55,000 to $60,000 level, you know, that means that you might get a resumal of the trend, and the 200-day moving average could continue to push higher. But again, this is one cautionary tale for me that we could continue to move sideways. Now, let me go back to the you know, the chart of S&P 500 and Bitcoin in here. Remember, we've talked about it, I think either 2 weeks ago or 4 weeks ago. I mentioned this a couple of times, but Bitcoin was selling off while the big boss S&P 500 would continue to push higher, and I was worried about this divergence. I said, I don't know, something it's wrong here. You know, either S&P 500 sells lower or Bitcoin goes higher. And you know, the good thing happened, and Bitcoin went higher, which means you know, the correlation right now, it's again towards, you know, 80 basis points in here, right? You're getting almost you know, very strong positive correlation. So let's see, the S&P 500 continues to look pretty strong. If this continues to travel upwards in here, Bitcoin should follow suit, and we can continue to go. So that's a positive signal for a return to this kind of risk on mode. But continue to watch this correlation, because I think it continues to build on itself, and it's an important kind of indicator going forward. Now, up into the you know, weeds of things on Bitcoin smaller time frames, stuff that I talked about it in the pro room, you know, every single day through our daily videos. Onto the counts, this is the more bearish one, where you're looking at this thing as having a you know, this kind of bearish setup. This is an older count, guys. I think I forgot this one here. Let me go back to, because I've changed this one, the one I presented back in July 31st, where I was looking at this. But since then, Bitcoin has added a little bit higher, and it doesn't look as clean anymore as being an A, B, C in here. It looks kind of ugly like that, because it almost looks like that's a third wave based on its advance. So I've changed that one to something like this, where I've basically counted this as a full decline in a 1, 2, 3 triangle, a very messy triangle here in this fourth wave, and it's A, B, C, D, and E. Pull back down in 5 for a wave A. Now you're having an initial decline in this wave A. This cannot be the entirety of the wave B. It would look very awkward if you would be that. And then counting it like this, right? It's kind of, it's too messy for me. It doesn't make sense to, you know, on an ABC like that. And in terms of a flat, it's even uglier, right? Plus, you don't have a pretty good impulse out of here. So I'm thinking, hey, what if this is just wave A of this B wave, right? You have this impulse, then you come back in this wave B, you come back towards these levels, then you go up in C, you stay below, you know, this large supply zone, and then that completes B into maybe a 78.6 between 61, because right now you're at about 61% retracement of this wave A. That creates your B wave, and then you sell lower in the C, right? So you come A, B, down in C. That's the only way that I kind of, I would still stay, a little bit bearish on the setup if this happens. So keep this, in the back of your mind, that that's a possibility on there. The other one I wanted to show you here is the red, right? So that's the bullish count, where we're looking for this as a wave 2, finished back here, W, nice X in here, A, B, down in ending diagonal on this wave C, and now you're going bullish. You're going 1, 2, 1, 2, 1, 2. Very, very, this means, hey, Bitcoin is ripping. So listen, it's sometimes when you count like this, right, it's like, hey, stay away from counting stuff like that, because it's, you don't want to be that bullish. But then the other half of your brain says, well, why not? Why wouldn't you be that bullish? What if Bitcoin is actually, because it's not like it's the first time it's, it's breaking, or it's, it's making huge moves. So you want to be prepared for that. So don't be afraid to count multiple 1-2s, right? Especially after you're coming, after a period of very strong support and a bullish move to the upside. Don't forget, you're breaking above this trend line. That, mind you, it's got only 2 touch points, right? But it's pretty strong. And now you're kind of broke above it, and you might come down to retest it. So I'm prepared for a bullish move higher. If this whole thing is just a wave 1 of these lows, and that's a 1, 2, 3, 4, very small 5, right? Then, if you're getting a little bit of a setback back in here and it looks in 3 waves, then get ready for the move back up higher. And this is what I talk about when I say, when you get trading opportunities in Bitcoin, right? It's one thing to buy it and hold it and look for higher prices and just have it as a store of value. And it's another thing of taking advantage of trade. So for example, we've traded Bitcoin from 41 as it was, not selling off, into the second. I was actually waiting for this C wave, for this decline to get lower. I think I've talked about it a couple of weeks in the video as well. Hey, I would like to buy it back in here and for a move higher. Guess what? It didn't happen. But the market showed you an ABC out of there into this 38%. It's very small. The C wave, it's right there. That was the C wave. So you get an ABC. I got a confirmation, and I went long at 41,000. And we've enjoyed a pretty nice move towards 45, 46 in here, right? And I got out of this trade. I said, listen, I'm hitting a zone of supply. It's, it was just a small tactical trade. Let's see what happens. If I'm getting another chance in here, I'll probably long it again and continue to build up my account. I mean, it's a different, see, there's a difference between being structural on your views on Bitcoin and being tactical on your views on Bitcoin, where you can take shorter term tactical trades. You don't have to do a day trade, right? Or get in and out of 5-minute charts, but anywhere from 6 hours to a daily, you can be in a trade for a couple of weeks and still make good, decent money. But you just got to be careful that you're using the Elliott wave to your advantage. Just know, what the retracements are, know where you're wrong, and get the fuck out of there, right? Because that's what people forget to do. You get into a trade and then you start looking for reasons to remain bullish. When the market tells you, listen, you got no business being there, get out, and then you can always get back in. So sorry for the bad words there, guys. All right, so I talked about this. Listen, the other thing that kind of worries me is this, the seasonality. Now, we've been kind of bidding seasonality here for the past month in July, because we've gotten a pretty decent rise towards the end of July, beginning of August, right? So we're probably somewhere up here in terms of where Bitcoin is in terms of performance, and hopefully we can continue to go. But I'm really worried about September. So I don't know what this means. It's we've had March and September that are very ugly, and kind of worries me a little bit. We'll see what happens. September is not a good month for a lot of things, but if we kind of get through that on Sketch, then you're moving into October, November, December, which are pretty nice bullish months, and that's something that I'm really curious to see how that's gonna kind of pan out. And hey, listen, take a little bit of a break, subscribe and like to this channel. There's I hope good information here that doesn't confuse you too much, and just don't forget to do that. I think it's important. We're getting a lot of followers. The views are growing, the account is growing. I love it. It's something that I'm obviously watching, because I want as many people as possible to kind of see our content and kick Elliott Wave Cafe up the rankings and start to beat some of these other Elliott Wave guys. They think they're better than us, right? So go ahead and subscribe and like. And then if you want to visit the pro channel, I'm not going to spend a lot of time here, but this is kind of what you get. And I've added this in here. It says where we actually make money using Elliott Wave strategies, right? We don't just invent counts to kind of fit our narrative. We actually trade them, and we're quite profitable on it, and not just on Bitcoin and crypto, but also on stocks and a little bit of forex there as well, and bonds and stuff like that. So come in, you'll love it. Give us a try. All right, let's take a look at Ethereum, and I presented a chart last week. I don't think I have it in here, where I was looking at this as a 1-2-1-2, just like in Bitcoin. Oh no, actually it's in the next slide. But wave 1 cycle here in this blue count, 2 cycle down, 1, 2, 3, 4, and 5, right? And with the alternate, this could be already wave 1, just like in Bitcoin, and this here could be a wave 2, and you're about ready to rally to the upside, right? And you're going, let's say, 10, 15, 20,000 in Ethereum. So from this longer term perspective, I remain, pretty nice and bullish. What kind of, keeps me up is the fact that this again could be a fourth wave triangle in here. And that means that, to kind of make a fourth, this has got to be a second of a lower degree. And this is kind of what comes into this next count, where I'm looking at this. Wave 2 cycle actually terminated here rather than here, right? And then you have a 1, 2, just like in Bitcoin. Then you have a 3, and then you're moving sideways in this fourth wave. And this is the painful trade. Again, that's probably going to take us, towards January, where you go, that's a 3-wave decline here in A, you go in B, you come in C, you go in D, you come in E, and you kind of drag along, and you're going nowhere, and it's like, hey, why am I not making money? What's going on with the accounts here? But it's just stuff that sometimes markets do, right? They just kind of go sideways for a while. So we'll see if that's what's happening in Ethereum right now. I mean, you can see in here 261% on the log scale was hit as part of this third wave, compared with this kind of wave 1 from this wave 2 low. And that's where we stopped, and we kind of came lower. Our targets for this year were 4K. So far, we're still kind of hovering below those levels. And then this is the ultra bullish one, right? 1, 2, 1, 2, which I like on the monthly candles. I talked about this a couple of weeks ago, that I did like this very kind of, it's small in here, but that nice kind of bullish rejection on the monthly. And I said, you got to buy the dips in Ethereum now, because although you didn't get many dips, but, you kind of have to buy them, because that's a pretty good signal that this zone has been retested, although with a couple of hundred higher than the actual level, right? This was 1450 or something, and this was 1650 or 1700, and now you're pushing higher. Now, from the way this kind of count looks, this is just a small blip in this whole correction, right? So it's a 1. If it's a small 2, oh boy, you're ready to rip, and you'll be at 10,000 Ethereum before you know it. So I'm excited about this count. I don't want to stay, I don't want to be afraid of being bullish, guys, and never be afraid of that. Just kind of, look for what the narrative could push the market being bullish, because this is what was going to keep you to hold your Ethereum from not selling it. All right, and this count here, it's pretty strong. I mean, look at that, right? Just a small blip in here, and you can just rip. So pay attention to the monthly candles. We're still, half a month away, a couple of weeks away, but this continues to look pretty good. So hopefully we can maintain that momentum. And now let me show you the ugly arithmetic scale, where this is a wave 1, that's a wave 2, right? I'm missing some data, whatever it is, 217, 216. I don't know when Ethereum started, but it's 0, right? So you go wave 1 up. Very messy second wave, right, with a bunch of drama in here that you can't really see in this arithmetic scale because of this high rise. So that's why when you put a log scale, you actually see the drama that happened in here, right, and the percentage moves. In the arithmetic scale, you don't see that. So you go 1, you come in 2, but it counts a little better. 1, 2, 3, 4, and 5, extended fifth wave out of there. You complete a larger third, and if you have a second wave cycle and a third wave cycle, then you need a fourth wave cycle, and that's wave A, B, C, D, and E, and then you go. All right, and it's not that aggressive either. You stay about 25 to 3,000, and then you just accumulate, and then you go up to 55 or 6,000 Ethereum, and then you complete wave 1 cycle, and then you come back down to 4, and then you go back up higher. So A little bit of a different story, but pay attention to this because it might very well be true. And then I'm going to take a victory lap, around the course here. So that's kind of what I have in Ethereum. There's not a whole lot to talk about. Again, just the possibility of that being a second wave, right? This drop in here, and if we're kind of climbing, we're starting to kind of challenge these highs, and you're starting to get in there. You get a small pullback out of here in a second. Hey, listen, you're about ready to rip to the upside. So always check yourself in the mirror. Always check your counts. Look at some alternates. Be confident. But always kind of cautious on things. And then here is the performance relative Ethereum to Bitcoin. I haven't shown you this in a while. This is the RRG charts, relative rotation graphs, and where you have a leading quadrant, you have a weakening, you have a lagging, and then you have an improving. These are daily charts. So these are this kind of green snake in here. It's the past 13 trading days, Ethereum versus Bitcoin, in terms of relative strength, and this year are about 13 weeks, Ethereum versus Bitcoin. Now, mind you, it's August 9, so maybe now it's going to push like this and maybe turn higher a little bit on here. But what it shows you is that on the weekly, Ethereum relative to Bitcoin kind of lost momentum. It's still leading. As long as you're in this kind of right side of this quadrants in here, you're still leading, but you're losing a little bit of a momentum. You can see how on the daily you picked up momentum as Bitcoin, as Ethereum kind of rallied a little bit stronger. But for the past, let's say 1, 2, 3, 4, 5 days in here, Ethereum has been losing that momentum and Bitcoin has been picking it up. So that's just something that I watch whenever you kind of want to flip, let's say, between Ethereum and Bitcoin. So if Ethereum starts to kind of get into this one and starts to look more that way, maybe it's time to kind of switch more towards Bitcoin than towards Ethereum necessarily. If you're one of the guys that kind of watches that very, very closely, right? And if you make these allocations between Ethereum and Bitcoin, these rotation graphs are pretty important because you get performance overall. Depending on where you go with your accounts and all that. So, guys, I think I'm done. Come back and visit us. Elliott Cafe _bar that will take you up to the paywall there, and you can see what choices you have. There's a 7-day free trial. So come and see our ramblings into the room. If you don't like, if it doesn't fit you don't have to stay. If you think it helps, and whatever all my daily videos and updates on Bitcoin and all the other stuff helps you out, and you learn how to trade, become a better trader, then you hang around. This is what we present in there. You can kind of take a look. There's also a course now. I've had this from the beginning, but you used to get 3-month subscription, to get it. You can get it now with about with the 1 month in there. So subscribe for 1 month, you learn. If you're patient, and then you watch the videos and you learn twice as fast. So guys, thank you again for watching. I love you all. I'll see you back here in a couple of weeks. In the meantime, visit us in the Telegram free room as well. There's a bunch of stuff in there too, and on Twitter. So talk to you later. Bye.